AUDUSD traders, welcome. So I was told that I should answer this request here from one of our members. Hi Djamal, is it possible to do one overall summary video where you take a typical time span, 1 or 2 months, and you explain how you would evaluate everything? I think I get lost mostly because I watch all of the videos as parts pieces and then I don't know how to best synthesize it all together, the whole. For me, if I was able to watch you do a full session where you took a chart that displayed most of the scenarios we'll see, empty market, the money tolerance, H4, squeeze line, evaluation stops, it would be super helpful to bring it all together and understand your thought process, how you evaluate the priorities and weight of each filter. Thanks. Okay, let me try that, if I understood this correctly. Remember, the MK block is obviously my live analysis, yeah? So I do that every day, and I think you have access to the MK block. So there you see my live analysis. But anyways, let's do the following. Let's just go here, for example, to the forward chart of Australian dollar. Let's go through what happened in this market. In fact, let me take a screenshot so I can draw on the chart as well. Here we go. Okay, and you will see that everything makes a lot of sense, especially if you take into account the squeezes and all of that. All right, so let's get started. So here in December last year, look at that. Look at this. Okay. So we have an expanding squeeze line, meaning that, look at this here, expanding squeeze line. So the dumb money shorties are selling the market again and again and again. Okay. So more and more dumb money short positions are entered. So what happens? The algos, of course, see that and push Australian dollar up so that those sellers lose. Okay. Typical position hunting. Yes, taking out the stops. With every pip they go higher, they take the next stops. So the shorties here, those ones are in massive drawdown, and it gets worse with every single pip. As simple as that. What happens then? They do this really exaggerated up move, and of course at some point those dumb money sellers collapse. Yeah, either their stops are taken, or they get a margin call, or they take their loss, etc. And that's exactly what happens. Now take note of this here, okay? Here we see that the squeeze line slopes downward, okay? So those dumb money shorties are leaving the market. They're taking their losses. So what happens in response to this downward sloping red squeeze line? Look at that. The price normalizes, of course, okay? That makes sense, doesn't it? Now, so then we had news, we had this little house clean here, both sides are cleared. Okay, then we had this consolidation for a while at the year end, normal. And what happens then? Look at this. Look at that. Boom, okay? We have a new squeeze. This time the dumb money goes long. So buys. Look, the logic of the dumb money is, look, the price came down so much, I will enter cheaply into the market and buy the reversal. Okay? That's the logic of the dumb money. And yeah, the price came down a lot. But what happens? Too many people, one idea, as they say. Because there's this buy activity on the dumb money side, the algos detect that, and what do? Boom. Oh, sorry. They push the market down again against those longies, okay? So that this time the dumb money buyers are put into drawdown, lose money, their stops get taken, they get margin calls, the loss gets worse. If they try to average down by buying again, it gets worse. And what happens again? Look at that. From today. There you see how things are repeating, really. Look at that. With a downward sloping green squeeze line. So the longies are starting to leave the market. Okay. And once enough down money long is left, what happens? They're going to do an up move. You understand? That's how this works, okay? Now, look at the big picture. The down money sells, the market goes up and takes them out. The down money leaves the market normalizes. Flat period. The down money buys, boom. They get position hunted, this time in the other direction because they were long rather than short. Makes sense, doesn't it? Remember, these things here, they don't repaint. This is how you see it in the moment. That's how you see it now historically as well. How cool is that? Makes a lot of sense, doesn't it? Now, let's continue. Also see some of those little shorties are a bit into profit, by the way, as a footnote here. Net loss reversal. That's why maybe once the low gets tested and so on, and they do their games and some shorties come in, they can do a normalization move, for example. Alright? Right now, they can still go down because they have some longies and they also have, I think, OSTs, which they can fill. Let's check. Let's go to the, yeah. Now, there you go. Look at that. So we already see the option strike targets long. So that means the more longies will leave the market, and maybe if they go a bit sideways and get rid of the longies which have tight stops at least. Look, by just letting the price drop 20 pips and taking all the short-term stops, for example. And then if some shorties enter at some point, boom. Then in this week they can fill, for example, those OSTs. You understand? I mean, that's not too complicated, is it? Okay, let's continue this exercise maybe and let's see, where else can we go? Well, I mean, let's go to Eurodollar. Look. So what do we have here? We have a similar scenario where the squeeze against the shorties, so a big up move. Shorties get kicked out of the market. The squeeze line goes down again, so therefore normalization move for our reversal. Take note of this, for our reversal. And since then, obviously, beginning of the year, we have a flat market. So we also have the house clean, bam bam, both directions, and then here whipsaw price action. Why? Why is this here whipsaw? Because the market is empty. Okay, both lines are very low. They're below the middle line also, so neither longies or shorties are dominating. Empty market, low bias. We do not like to trade there. You can try range scalping and advanced things, but generally speaking, we do not risk a lot. Always skip it altogether if you're more puristic. Okay? Then what happens? Some longies come in, so they do a decisive down move and take out the longies. You see? It's really how this game works. Look at this extreme example in pound Aussie. Massive squeeze against the down money shorties. Massive down money sellers came to the market, so they did this exaggerated move up. Did not only take the moving edges, but took all the highs here. You see? Nothing is random in forex, believe it or not. Okay? And if you don't have a clue what I'm talking about because you're new, study that stuff because this is the real deal. That's as close as you get to a holy grail in this game. Okay? These tools are quite amazing. They're leading tools. They're not historical statistical tools like all the stuff you see on the internet. This is all data based, and that's why it's so complicated to run. Okay. So you see, like, we literally can take anyway. Let's take dollar cut for our chart. Look at that. So here with a massive squeeze against the down money longies. The down money buys and buys and buys and buys, okay, throughout December. So the price goes down, down, down. It doesn't matter whether it went down a lot already. It can again go down the same distance, you see. Here, if you just see naked chart, you think, oh, come on, it came down so much, I will try to buy. That is the trap the down money falls into. This human psychology, let's call it like that, if you prefer. And what happens? They clear out, the longies get kicked out, and then they do a 4-hour reversal up. You see that? Then empty market like in the other ones, consolidation, the same thing, and then slowly shorties dominate and with an expanding red squeeze line, so uptrend. You can enter expensively here, okay? It's against your intuition, but if you see that the down money is expanding in this direction, you can even up here, you can still buy. This is a failed 4-hour reversal. rather than doing a 4-hour reversal, the market will go up in the other direction. Okay, these are all defined setups. Watch the video course where I go through all these things one by one. Okay, it's literally repetitive. Okay, let's go to the day chart of Kiwi. You can see I can literally pick any market, it doesn't matter. Just to show you that, you see, like, massive longies come into the market and push the squeeze line up. Therefore, they went all the way down and cleared the moving average. And let's go to the 4-hour chart so we see a bit more detail. Where is dollar cuts? Yeah. Okay. You see. Sorry, excuse me. Kiwi wanted to see. Kiwi. Yeah. Let's go to the 4-hour chart of Kiwi. So, okay, short is leaving the market, down move, market is empty, whipsaw, and then the long is expanding. Okay, see, a long is coming in, and this results in a squeeze. So even if you enter expensively and you sell here, believe it or not, you can do it if you see that the dumb money is buying. As simple as that. Okay, how cool is that? Now, when there's a squeeze, do not trade against the squeeze. That's a golden rule. Okay. This is the line in the sand. No matter what you do, even if you do a bit of freestyle trading, do not buy into an expanding squeeze curve with a green line. And do not sell when there's an expanding red squeeze line. Okay? Because then you end up on the dumb money side, you will get whipsawed or stop punted. We do not want to do that, obviously. Okay? That's a golden rule. And if that squeeze is like on the 4-hour chart or day chart, you better follow it. Now, sometimes on the one, let's say the market is empty and everything is low bias. Now, you may, for example, have a bit more tolerance for that on the lower time frames. Yeah, let's say you're waiting for an option strike target trade, like here, Euro Yen. Look, you see that the slope is starting to go down. That's what you want to see in order to trade that. Okay. Now, sometimes you may be a little bit early, and it can be that shorties come in the next 2 hours, and then the squeeze line will lose the negative slope, and there will be a counter move. Okay, fine. Sometimes it pays to rather be a little early if you like the trade overall. Okay, like here you have option strike targets, you have an order gap zone, you have SDS on the way. So the more you see, boom, did you see that? The more the squeeze line turns down, okay, and let's say this SDS here gets taken, the better it looks like for an OST trade, for example. You see? But do not enter here. Even if the OST appears and you see that there's an expanding squeeze line, an upward slope, do not sell, because boom, there's the up move first, you see? I mean, that's pretty sophisticated, I would say. It takes maybe sometimes a little bit of discretion, fine. But we know exactly what kind of setups we're waiting for, okay? But obviously, the more short-term you go, the more you need to really be prepared and have done your homework, yeah? That's common sense, I guess. Okay, look at that. Let's pound yen on the 1-hour chart. Let's talk about this. Expanding squeeze line. So we are not just trading towards this inner range MTS here. We don't. We wait, okay, until the shorties are leaving, all right? Because there's the pre-run counter move. This is a pre-run counter move, okay? They first clear the opposite side. They do not instantly go for the medium-term stop because they need to shake off those shorties here. Those sellers, even though they're not many, but they need to shake them off so they can profit when they go for the MTS run. You understand? These are the principles I've explained a lot, and once you understand and internalize these principles, everything makes complete sense, obviously. Okay, that's why, I mean, we do not simply trade randomly towards targets. We are a bit more sophisticated. We wait until the market turns into the direction we want it to turn in terms of its structure, meaning that the dumb money does what we need it to do before we enter ourselves, okay? Do not trade in the direction of the dumb money, obviously. Okay? So I think that's maybe helpful, and I mean, I could go on and on and on, and You see a day chart euro pound, you see longies coming in, they're high on the scale, they create a squeeze, so the price goes down over days and weeks. This is how the trends are created by the smart money, okay? When enough dumb money buyers are willing to buy, they're going to push the market against them. And once they're kicked out, they normalize in the opposite direction. Look at this massive squeeze here. You remember we traded that. Check the MK block where we shorted down. Even our entry was rather expensive, but because massive longies are coming in for whatever reason, okay? Do not try to pre-guess what the dumb money does. Just react to what it does. We trade what we see, not what we think. You see, we traded short nicely there in EG against the longies because they went just crazy and bought, okay? So, as you can see, this is not rocket science if you ask me. I mean, you need a bit of practice, sure, but it's not rocket science, it's very repetitive. So the onus is really on you. If you feel that there's one or two things you need to understand better, you know, study the MK block and also ask questions in the forum. I will try to clarify things. Anyways, I hope that you liked this video. Lots of love. All the best.